Everyone's talking about AI stocks. Most of them are hype. This one's not. Palantir just dropped one of the most elite earnings reports of the year. 71% growth in the US commercial revenue, 45% growth in government, 39% overall, and they're doing it with zero debt and $5.4 billion in hard, cold cash. That's not speculation, that's execution. And here's the crazy part. The stock dropped 9% after hours. Why? Because Wall Street expected a miracle and only got greatness. That right there, that's the opportunity. Most people wait for confirmation, but if you wait for a high-growth company to come down to earth, you'll miss the shot. This is what it looks like when a company starts building a monopoly, and once you're king of the mountain, it's a hell of a lot harder for anyone to knock you off. In this video, I'm going to break down exactly what happened in this earnings report, where the risk actually is, and why I'm going all in on my Palantir thesis. No fluff, no hopium, just numbers, strategy, and conviction. Palantir just shattered expectations. Everyone saying Palantir is overvalued clearly didn't read the earnings report. Let me break it down for you, slowly, so it sinks in. They pulled in $884 million in revenue, not a startup phase, at scale, and they did it while throwing off $370 million in free cash flow. That's a 42% cash margin. You name another software company doing that right now. I'll wait. This is the part people don't get. It's easy to post growth when you're small, but Palantir is stacking growth on top of $1 billion base. That's not just impressive, that's rare. US commercial revenue exploded 71%. Government revenue climbed 45%. The entire business is accelerating and scaling. You're worried about the stock dropping 9% after hours? Great. That's called market stupidity. Wall Street asked for a miracle. Palantir gave them dominance, and the price got punished. I'll take that trade every time. Here's what matters. 139 new deals over $1 million. $5.4 billion in cash, zero debt. Their Rule of 40 score, 83%. That's elite, not tech elite, business elite. Everyone's looking for the next big AI play. It's right here, and nobody wants to touch it because the PE ratio makes them nervous. Newsflash, high growth companies are supposed to have high multiples. That's what growth is. The bottom line, Palantir didn't just beat expectations, they annihilated them. Operationally, financially, strategically. And if you're still waiting for permission to believe in this company, you're not an investor, you're a spectator. The takeaway, this wasn't a good quarter. This was a warning shot. They're not coming to compete, they're coming to own. So Palantir crushes earnings, and the stock then drops 9% after hours. Most people look at that and panic. I look at it and get paid. Here's what actually happened. Expectations got delusional. Wall Street was praying for fireworks and confetti. What they got was $844 million in revenue, 44% operating margins, and the strongest commercial pipeline this company has ever had. But because the guidance didn't come wrapped in a gold-plated trophy, boom, sell-off. This isn't new. It's what happens when a stock runs 65% year to date. The tourists pile in chasing price. Then earnings hit, they don't understand the report, and they panic sell because it didn't hit their fantasy number. Let me make this clear. Spectators watch price. Investors focus on fundamentals. And Palantir's fundamentals are expanding, not stalling. Rule of 40 score, 83%. That's growth plus margin, and it's still going up. Do you want proof? Look at what didn't make the headlines. US commercial remaining deal value is up 127% year over year. 31 new deals, over $10 million. Customer count up again. The momentum is real. So no, this wasn't a miss. It was a mismatch between what people wanted and what the business actually delivered. This dip, it's not a problem, it's a signal, and it's flashing opportunity in bright red letters. The takeaway here, the stock didn't drop because of weakness, it dropped because most people are too lazy to read the financials. And when that happens, smart money doesn't flinch, it gets to work. So is Palantir a good long-term investment? Here's the honest answer. Yes, if you understand what you're buying. Palantir is not cheap, it's not supposed to be. This is what hypergrowth looks like when it's backed by real product market fit, not hype. You're not buying a moment, you're buying a machine that keeps compounding. Let's go over the bull case. government contracts that span decades, commercial clients embedding Palantir deep into their operations. Contracts over $10 million are increasing, retention is sticky, the expansion is real. This company isn't just selling AI, it's becoming the core infrastructure behind how organizations make decisions. Once Palantir installs into your workflow, it owns it. That's the moat. The longer they stay, the harder it gets to rip them out, and that's why deal size keeps growing. Now the bear case. The valuation is wild, sky-high PE ratio. You don't buy this because it's cheap. Europe is still half asleep on AI. This is not Palantir's focus, but they may come round in time. Stock-based compensation is real, but they're profitable. Cash flow is positive and tightening it quarter after quarter. Eventually, the PE will normalize, but if you're waiting for that, the run will already be over. Look at every generational stock over the past 25 years. None of them looked rational at the start. So yes, Palantir might feel like too much risk for some people. If that's you, then don't buy it. But right now, Palantir is building a monopoly on operationalized AI. And once you are the system and not the tool, you win. The takeaway, this isn't about price, it's about position. And Palantir is positioning itself to run the table. So everyone's screaming AI, but here's what nobody wants to admit. 90% of these companies are just slapping a chatbot on their product and calling it innovation. That's not AI, that's marketing. Palantir's different. They've been building real operational AI for over a decade, and now it's being deployed in the most critical systems in the world, not as a side tool, but as the core decision-making engine. Let me show you what real looks like. The US Army is using Palantir to run its Titan program. That's battlefield intelligence, targeting, and live combat systems. Not a prototype, live. NATO is now using Palantir's Maven Smart system to enable AI-driven combat and logistics planning. Wendy's restaurant, they reduce multi-week problems to 5-minute fixes using Palantir's AI. Heineken rebuilt 3 years of supply chain work in 3 months. AIG expects to double its 5-year growth rate using Palantir's AI-powered underwriting. That's not a beta test, that's execution. While other companies are still figuring out prompt engineering, Palantir is deploying agent-based systems that actually move money, resources, and people. This isn't AI enhancement, this is full-stack, ontology-driven automation. And here's what really matters. It's not plug and play. Once Palantir's system is wired into your data, your processes, and your people, you don't rip it out. It becomes the spine of your operation. That's how monopolies form. Quietly, strategically, permanently. Everyone else is selling flash. Palantir is selling function. And the market hasn't caught up to that yet, but it will. The takeaway here, AI isn't the edge anymore, deployment is. And Palantir is already years ahead, while the competition is still trying to build the starting line. Yes, Palantir still has risks, and here's why I'm still bullish. Let's talk about the stuff that scares people. Palantir's not cheap, and a PE over 600 speaks volumes. The valuation is steep, and people love to tell you that like it's breaking news. But here's what they miss. You don't get this kind of execution from a company that's still figuring it out. This isn't some pre-revenue startup. This is a company doing nearly $1 billion a quarter, spitting cash and growing fast. That price tag, it comes with the territory. Now, let's address the international problem. Commercial growth outside the US is lagging. Sure, but that's not the full story. Palantir just locked in NATO. They're deploying battlefield-grade AI through Maven systems across allied forces. So no, Europe's not asleep. They're just buying through a different door. Defense. And defense contracts aren't short-term. Then there's the one that everyone wants to scream about, stock-based compensation. Here's what it actually means. Palantir pays employees in shares, not just cash. That increases the number of shares outstanding, which could dilute your piece of the pie. But here's the flip side. It keeps world-class talent building the product. And now that the company is throwing off real profit and real cash flow, SBC is becoming a smaller slice of the total. That's how you scale right. Reward early, tighten later. And let's be real. For all this risk, Palantir has no debt, $5.4 billion in cash, growing customers, record deal sizes, and an AI platform that's years ahead of everyone else. This isn't about perfection, it's about dominance, and that's what Palantir is marching toward, quarter after quarter. The takeaway, if you need a flawless balance sheet and perfect headlines to buy a stock, cool, this isn't for you. But if you want a company that's already winning and still early in the race, Palantir is exactly where you should be looking. Let me make this simple. This was an elite earnings report. Record growth, record margins, record deal flow, zero debt, billions in cash, and the stock dropped. Cool, that's not a problem. That's a window, and I'm walking straight through it. I'm not selling a single share of Palantir, not one. In fact, I'm adding, but I'm doing it smarter. I'm selling deep in the money cash secured puts. That means I get paid today to potentially buy shares at a discount tomorrow. It's how you build size and collect premium at the same time. Now let's talk about the elephant, valuation. Yes, the PE ratio is nuts, but that's what high growth looks like before it stabilizes. You wait for it to come down, you're already too late. People said the same thing about Amazon at $300 and Nvidia at $50. Here's the real question. Is the business getting stronger every quarter? Yes. Are the numbers trending up across customers, contracts, revenue, and cash flow? Yes. Is the product becoming harder to compete with? Absolutely. That's what you bet on. Look, Palantir is not for everyone. If the volatility scares you, don't buy it. But don't confuse price swings with business failure. Right now, Palantir is building a monopoly in operational AI. Once you're the system, not the app, it's game over for the competition. Our takeaway, I'm not hoping Palantir will win. I'm watching it happen in real time. And when that kind of clarity shows up in the market, you don't hesitate, you move. You just saw one of the strongest earnings reports of the year. Palantir's growing fast, printing cash, expanding margins, and locking down deals across defense, AI infrastructure, and global enterprise. That's not speculation, that's execution. So now you've got two choices. Option one, you take action. You stop chasing headlines, you stop waiting for the perfect entry. You use what I just showed you. You build a position with purpose and strategy. And option two, you stay on the sidelines. You keep watching, keep second guessing, and tell yourself, I'll buy it when it drops more. 6 months from now, you'll wish you had conviction, but you'll be too late. Here's the proof. I've already made over $1 million in 2024 trading stocks just like this. Right now, I'm up about $500,000 this year, and Palantir is a core part of that performance. Not because I guessed, not because I got lucky, because I understand what winning looks like in real time, and I act on it. If you want to see exactly what I'm buying, when I'm buying it, and how I'm selling cash-secured puts for weekly cash flow, then join my Patreon. Inside, you're going to get real-time trade alerts, no guessing, no waiting, daily breakdowns of what's moving and why, the exact strategies I use to generate consistent returns live as it happens. You can keep watching from the sidelines, or you could start executing like someone who actually wants to win. But either way, don't say you weren't told.